Here are 7 laws of profitable trading they never teach you. Most traders fail not because they can't read charts, but because they never install the laws that make profits repeatable. If you want real freedom and control in trading, if you want to stop stressing and start growing your money, you need structure. You need a system like the Star Trading Method. Stick with me through this video and I'll show you 7 laws of profitable trading. The same laws the pros follow, but no one seems to teach beginners until now. So quick disclaimer, this video is for education only. Trading involves risk and past performance doesn't guarantee future results. I'm Lewis, founder of Star Trading. I've been trading the markets for over 12 years now. I've never blown an account because I stick to these rules, but I have overtraded, I've chased phantom setups, and I've done all the mistakes that most traders make. The only reason I trade for a living today and make money from it is because I finally installed these 7 laws. By the end of this video, you'll know exactly how to build consistency, protect your capital, and actually grow your trading account. Now, these 7 laws aren't complicated. Everything I do keeps things simple, but most traders don't follow them. They don't build these habits, and that's why they never get ahead. So let's go through them one by one. Law 1, decide risk first. This first law is essential. You never look at a trade without first deciding exactly how much risk you're willing to take. Many beginners jump straight into trades and then they figure out stops on the fly, which is a recipe for disaster in any market, but especially today with lightning fast price moves. Pro traders start by defining risk in a cash value. For example, if you have £10,000 in an account, risking 1% means risking £100 per trade. Before placing an order, know your stop loss level and maximum drawdown. Also, set a daily stop limit if you are day trading. Commonly, 2 reward or 2% is the case. When you hit that, stop trading for the day. This rule protects your capital from emotional revenge trading and catastrophic losses. I have never made the mistake or had catastrophic losses because I always use my correct risk parameters. I once worked with somebody who, before they were with me, had a very volatile market environment. They didn't use a stop, and one trade lost them 2 months worth of profit. Don't be like them, be like me. You want to make sure you're lowering that emotional toll. Compare what they did versus what I did. Let me know which one you'd rather be. So yes, hitting your stop limit may sting, but it prevents financial ruin indefinitely. In 2025, this law is even more crucial as markets respond instantly to global announcements, regulatory changes, major macro events affecting DeFi, stocks, all of those sorts of things, and Donald Trump sending out random tweets on X or whatever it is we call it now. If you're unsure, don't trade. Law 2, one edge, one playbook. Law number 2 focuses on making sure you have one edge, one system to use. The temptation today with hundreds of new trading apps and AI-driven strategies is to bounce around from one idea to the next. Scalping, trend trading, news trading, DeFi, arbitrage, all of these things, the list really is endless. But professionals and successful traders master one strategy until they are confident it works. I've spent months, if not years, mastering the strategies that I teach people, making sure that the criteria that we use consistently show up in the market and create what we want. That develops intuition and muscle memory in your strategy. Your job right now, write down what makes your setup valid. Define the trade conditions, entry, trigger, stop placement, and profit target, all of them precisely. Write this in your playbook. Only trade setups that fit your strategy. And to build discipline, try trading your chosen strategy for the next 30 trades only. Ignore all other setups or possibilities. You'll be surprised how drilling this in builds a habit of consistency and confidence even when markets are uncertain. Law 3, trade probabilities, not opinions. Trading based on opinions or gut feelings does not build consistency. The market doesn't care about your hunch or your gut feeling or the social media hype around particular companies or blockchain policies, blah, blah, blah. Instead, trade probabilities. Use expectancy. What's your win rate? What's your average win versus your average loss? Look at all these. So for example, if you're winning 40% of the trades you place, you need to be winning twice as much capital-wise as you're losing to be profitable. Track your last 20 trades and calculate the win rate, the average win, loss, and then derive the expectancy you have for that strategy. If it's a negative outcome, work on improving your risk reward or refining your setup. This mental framework keeps you steady during inevitable losing streaks or sharp market moves triggered by rapid technological shifts or geopolitical events. Law 4, time blocking beats screen staring. Law 4 is about trading smarter, not harder. Many new traders believe the more time that they spend glued to their screens, the more opportunities they'll catch and the more money they'll make. But in reality, this often leads to emotional fatigue, to decision paralysis and poor trade quality. Markets are not active all the time. Your edge appears in specific windows aligned with volume spikes or news cycles. When I started trading full-time, I would stare at multiple charts for hours trying to catch every little move, chasing noise. My performance suffered and my stress skyrocketed. Over time, I narrowed my focus to just a 30-minute window during the morning, which was the time of day that worked best for me. So that allowed me to get up, do my thing, and trade when the markets were quiet, allowing me to look at the markets with a clear mind. So by concentrating my time into when works best for me, and that may be for you the evening, I avoided impulsive trading throughout the day. Time blocking forces discipline, it reduces screen fatigue and improves decision-making quality. For example, I pick a trading window in the morning, which for me has got the best historic results. People I teach often like to trade in the evening. That's when they're more laser focused and able to stick to their system. Outside of those timeframes, it doesn't work very well for me. So consider your own trading routine. What time of day do you best trade at? Is your mind the sharpest? Try setting a fixed window for at least 2 weeks and note how your quality and emotional state improve. This law is especially relevant today with information overload, driven by all of our news feeds, our social media, trends around all the different things, and again, everything that is happening globally, economically, and politically. Time blocking turns trading into a focused, manageable activity rather than an exhausting full-time marathon. I'm training for one of those, I'm not doing very well, it's exhausting. Law 5, process creates profit. So law 5 solidifies the foundation of your trading, your process. The market is unpredictable, and that's why your process must be rock solid and repeatable. My trading day starts with a pre-session routine where I spend 5 minutes reviewing higher time frames, doing my technical analysis to set the context of how the market is moving. I make sure I identify those levels, I identify the market bias, and I check for any major economic impacts that there could be in case I want to avoid the market. You don't really have to do that though. In the execution phase, I patiently wait for my strategy to set up using the star trading method. No chasing or hoping for trades to appear. If the market doesn't set up, I don't force it. This discipline has saved me countless losses, and it allows me to trade in less than 30 minutes per day because I'm super clear on what it is that I am looking for. I'm not affected by any hype. After trading, I spend about 5 minutes journaling every setup that I've taken. It may be a few, it may be none. And to do that, I use screenshots and I note what went well, what didn't, and I include tagging my emotional state in there as well. Whether I was calm, was I impatient, was I disciplined and sticking to the system. Now this self-review builds awareness and trains my mind to reduce emotional trading. Your process removes emotional guesswork and replaces it with confident execution based on rules. If you don't already have a clear routine, draft one out now. Cover pre-market preparation, trade execution rules, and post-market, post-trading journal elements as well. Consistency and process is often the difference between a successful trader and an unsuccessful one. Law 6, revision fixes habits fast. So this rule is a game changer for quick improvement. Most traders beat themselves up for mistakes. I can't believe I've moved my blooming stop again. This negative self-talk only reinforces bad habits. Instead, use perfect replay. After trading, pick one mistake and replay it in your mind, but do it correctly. If you chased an early entry, imagine waiting calmly for confirmation. If you moved your stop, see yourself holding it firm per the plan. Doing this repetitively rewires your brain, turning disciplined trading into automatic habit. If it's good enough for successful sports people, it's good enough for us. And this technique is backed by neuroscience. Mental rehearsal strengthens neural pathways for better decision making under stress. So over time, perfect replay leads to fewer impulsive errors and better emotional control. Even during the unpredictable market events that we've seen this past last year, star trading traders have been successful. So try adding perfect replay to your post-session routine. Just 5 minutes daily focusing on one trade error and mentally fixing it can accelerate your learning dramatically. So finally, Law 7 concerns your mental environment, your mindset. This is your greatest asset, or it could be your biggest liability. In today's markets, the endless stream of breaking news, AI hype, Twitter rumors, political unrest, and market crashes can poison your mental diet. Constant doom scrolling or obsessing over headlines instills fear, impulsiveness, and leads to revenge trading. Instead, consciously feed your mind positive structure with if-then scripts. Present mental rules that guide your actions. For example, if I hit my daily stop limit, then I stop trading and acknowledge discipline as a win. If I miss a trade, then I take a few deep breaths and calmly prepare for the next opportunity. If I feel emotional pressure to trade, then I review my journal and process before making a decision. These scripts create market immunity, resilience to emotional and external distractions. They reprogram automatic reactions into structured, calculated responses. So write at least 3 if-then scripts personalized for your trading psychology. Keep them visible while trading as reminders to stay grounded. I personally love a post-it note. Let me give you a quick example. One of my students used to take 20 trades a week. No process, no journal. They were frustrated all the time. So we cut their trades down to a single setup with a really clear process, and in just 1 month, their trade number halved and their quality improved. And then they saw their first consistent green month. It wasn't luck, it was structure that led to profit. So let's recap. Here's your routine. Pre-session market levels, set your bias, check the news if you want to, I don't, and define risk. Number 2, execution. Wait for your playbook setup. Stick to your strategy. No jumping in early. Number 3, post-session, journal every trade, tag your emotions, and revise one mistake. These 7 laws are the foundation of successful trading. They work when you follow them consistently. So if you're ready to stop guessing and start trading with structure, I've put together a free masterclass where I walk you through these 7 laws step by step and reveal the method that I use. So click the link in the description to save your seat. Don't waste another day guessing, install the laws, follow the process, and watch your confidence and your success grow. Subscribe now, hit that bell for notifications, and share this with the trader who needs a real plan. I'll see you in the next video.